Has the CRR outlived its utility from a banking and therefore consequently economic perspective as well?
So when we're looking at the CRR, we should remember what is the ethos behind the CRR. It is more a case of maintaining the integrity of the system. So today when we're talking of CRR, we should not be looking at it as a measure of providing liquidity to the system. Okay, so we did have a cut in the CRR, but I think interestingly the RBI governor had mentioned very clearly that it was to take the CRR back to what the original level was before we had the Ukraine war came through. So the CRR, I wouldn't say has outlived its purpose, but I think it can be used in a more meaningful manner when it comes to the banking system, because there are other regulations which are in place, like say the LCR. Now that is the amount of liquid assets which banks are supposed to hold. Now if per force you have to keep 4% of your NDTL in the form of cash with the Reserve Bank of India, if you allow the same thing to be a part of LCR, I think that's one way in which you could free out reserves. But having a CRR intrinsically I think is required.
Madhavi, I'm coming to you. Madan has offered us two arguments on this. Do you want to supplement to them, and do you agree with the basic question that I had posed?
No, I agree with Madan to that extent. See, over the years, the macroprudential norms have also evolved. At this point in time, your LCR ratios are pretty much comfortable. In fact, most banks are running around 130 plus kind of an LCR. At this point in time, even if you're keeping a CRR which is say more than 4%, which is what they've historically kept, would have anyway led to more sucking of liquidity to the system. So I think to that extent, it was pretty much required that they release or normalize a CRR for that extent. But I agree with Madan on that front that